You've heard about the ghost cities in China, massive sprawling cities with housing, amusement parks, landmark replicas from around the world and everything in between. But what about the cities that are invested in but never get built? We'll discuss both today in what are unfortunate circumstances of central bank easy money policies. You came here for the truth, so let me unveil that for you. I've covered it here on the channel before, you may have even seen it in the news, empty cities across China. I've touched on this because it's so important to show you the excessive waste that is going on today. We build things that we don't need simply to keep people working. It's not just in China, that's just one example. I will show you that at the end of the episode because I'm sure you've seen a lot of it. However, we are going to look at some other issues first. Investors pumped billions into suburbs that never got built. In my opinion, this is a real ghost because the money's going in, but nobody sees the results. Deals involved a rare approach to investment in real estate. Some Walton Group backers say they've lost 80% of their value. So those are the major topics for this one here. Investors from Singapore to Toronto are wondering why North America's vaunted urban sprawl ebbed before the billions they pumped into a giant land banking firm could pay off. I'm going to cover the details of this really quick. I will try to only give you what you need to know and we're going to move on. So this company, Walton Group, sold them on the idea of investing roughly $10,000 or more apiece in rural properties outside of fast-growing cities like Phoenix, Toronto, and Atlanta. But $3.8 billion in land assets, 92,000 investors, and 100,000 acres later, the expected sprawl and the hoped-for fat returns have mostly not yet happened. And it doesn't look good because some backers say that their shares are worth only 20% of what they put in based on the most recent 2017 appraisal. Not only is it bad for the investors, it looks bad because all of this urban sprawl that has taken place has been too excessive. It has gone too far. It's not just this one company. I'm sure there are a whole list of companies doing the exact same thing. People are seeing areas like Toronto, like Phoenix, for example, that are building up. So there are companies out there, and for one reason or another, whether it's just straight out fraud or whether it's a financial issue that they have to deal with, they don't get to the project, people lose money, and they're trying to get in with little money, little knowledge, and simply trying to make it big. This doesn't work that way. That's why you have to do your homework. That's why you have to be educated. And that's why if you don't know what you're doing, you shouldn't invest in that particular asset. Here you can just see a map showing you the vast majority of companies. 345 North American land projects have passed their projected sales date. So people, are they ever going to get their money back? If they do, it seems like they're only going to get a small portion of it. So this just shows you that in graphical terms. In the top paragraph here, they're basically just trying to say, don't worry about it. We are going to see some major returns. Things didn't work out the way that we had hoped during the recession. The recovery wasn't as good as we had anticipated, but hang in there. Everything's going to be just fine. And they mention some really good points in the second paragraph here. The investor's experience illustrates the risk of land speculation years in advance of development, as well as the perils faced by smart retail investors who lack the expertise of larger investment managers. A majority of more than 300 Walton land projects from Alberta to Washington are delayed, often years past when investors expected to pay off. This is what happens when you speculate. You can often get burned. I think the issue is that people with a little bit of money, let's say $10,000, want to invest in real estate. So they put their money with somebody else, in this case, the syndicate, and that isn't something that they have control over, they don't have the knowledge of, and they get burned. It seemed to be a very good investment, and they were a well-respected company until a point when they weren't. You have to understand that. Everything seems good until it isn't. Think about Nortel back in the day. It was booming. The company was spending money like crazy. They were investing. They were expanding. And then suddenly it was non-existent. It wasn't that long ago when we heard the talks of Home Capital and the troubles that they were experiencing. This was largely covered up because they didn't want you to know how weak the market actually is and how fragile it is. Home Capital to pay $11 million over mortgage fraud. You remember this from a few years ago. I keep hearing all the time about how real estate always goes up, it always goes up, everything is very safe, there's no delinquencies, you don't have to worry. But of course, all it takes is for you to pick up a book and learn what happened during the mortgage crisis last time. Everyone still thinks today that somehow it was subprime that was the real issue. But understand how quickly that went from subprime on to all of the other mortgages out there because of derivatives. The sheer amount of fraud going on in the real estate industry is not just limited to home capital. It's not just limited to subprime in the United States up to 2007. It's going on everywhere around the world to one degree or another. I want to turn the page over to the ghost cities of China. This is one very good example of how so much money, so much capital has gone into something that isn't needed right now. The whole point is public works. Get people working today so that you can keep up the numbers and make everything look good statistically. If you keep people working through the tough times, then this will slow down the rate of that decline. At least that's what we're told. This is one example here, empty city with the Eiffel Tower replica. Here's another empty city. And this comes out of an article in the South China Morning Post. I often hear about how these cities are not actually empty, how everything is doing good there, that people have moved into them, and I keep hearing conflicting reports. The objective, however, was very clear. Let's make a whole bunch of cities and people will eventually move into them. I know something as a fact that even though people may move into these cities, the risk of expanding too far, too fast is apparent, and that is seemingly what has occurred. This is very important what they mention at the bottom here. Unlike the ghost towns in the West, the ones in China are created out of haphazard and rushed projects by local governments attempting to boost GDP growth and reach urbanization targets. We've seen previously in China the reports and the official admissions that GDP numbers had been skewed in these local areas simply because they needed them to look very pretty, and we all know why. The ghost cities are part of that, and they are not just Ordos or any of the others that you've seen in the news. These are certainly prolific and are continuing to expand today. You can look at this interactive map from the South China Morning Post article, and it just tells you the demolition indicator. The warmer the color, the higher the danger of ghost towns. So you put your mouse around, and just to show you here some examples, there's Ordos. 54% demolition indicator, shows you the population, giving you an idea of how much risk there is here, and you could just go around looking at the different cities if you happen to know them for yourself or you're just interested in general. Now, while these situations I've brought to you today are technically different, I think that they're all caused by the same underlying force, and that is central bank policies. We have easy money today, cheap capital today, that is allowing this to spread too fast. We have the governments, particularly in China right now, that are making it extremely easy for these governments to loan. They're in fact pushing them to loan, and this creates the havoc that we are seeing right now. The same issue is going on with borrowing money in the United States and Canada. It's extremely cheap, so they are creating these events that will unfold and have already unfolded. If there were tighter policies and if people had an incentive to actually save money instead of taking excessive risk, we would not have many of the issues that are present today and that will happen in the near future. That's all I'm going to say. If you found this video informative, please give me a thumbs up. When you give me a like on this video, you're supporting me to help push these higher up in the search rankings, so I do appreciate that very much. If you want the financial education you were not taught in school, these two books have everything that you need to know. I cover China, the US, I talk about real estate, I talk about debt, interest rates, central banks, and everything. Check them out at the link in the description if you want the audiobook that's available at themoneygps.com. Wait a second, hold on, you're not done. You got to watch this video. There's a lot of information in this for you. Click on it and I will see you there.